Good morning, everyone, and thanks for the brevity there, Adam. Accenture are very proud to be, again, a sponsor of the conference this year and to be an associate member of the ABA. And again, I want to applaud Anna and her team for introducing this class of membership a few years ago. It's fantastic. 2024 does mark a really important year, and we're about to show a short video which commemorates actually the 70th anniversary of the formation of the ABA. So without further ado, I think I'm going to allow the video to be played.
The Australian banking sector is the lifeblood of Australia's economy. 2024 marks 70 years since the banks came together to forge an alliance advancing their public policy interests. In 1947, Prime Minister Ben Chifley proposed legislation to nationalise the private trading banks, sparking a major political mobilisation from the banking sector. Thousands of volunteers advocated against the policy, using public relations tactics that have since become commonplace. This successful movement would eventually become the organisation known today as the Australian Banking Association.
So I was head of the task force on the Campbell Committee report. It was very broad and sweeping deregulation, most quantitative and price controls were abolished. 16 new foreign bank licences were granted. We had competitive neutrality introduced between the bank and the non-bank sector, and we introduced a prudential regime based on risk capital. Banks need to meet the legitimate needs of the broader community, and if they don't, then governments will legislate one way or another. So during my long career, I've seen the ABA grow from almost nothing into a real industry association powerhouse.
The banking sector led the charge in introducing new technologies, including Australia's first ATM in 1969, point-of-sale technology in the 1980s, and the new payments platform in 2018. All facilitating simpler, near real-time payments for all Australians.
I think it's really important for customers that Australia's banks are fierce competitors, but there's times when it's important for them to cooperate, and there's no more powerful example of that, I think, than the way they came together to support their customers during the COVID-19 pandemic. So bringing banks together through the ABA to get one single package, no matter who you banked with, to negotiate that with both the regulators and the government, I think delivered something really important at a time of great national fear.
Australian banks play a vital role for regional communities with tailored products, accessible services and support in remote areas.
Here in Australia, we're no strangers to natural disasters, and all too often those disasters mean that people can't access banking services. So banks have worked together through the ABA to make sure that any time a community goes down like that, we can get a bank in a box out to them.
There have been so many different projects that I have worked on with the ABA in my 15 years involved in the community sector. The one that first comes to mind for me is the role that the ABA's played with the banking code of practice. The second one is the industry guidelines. The ABA's played a really important role in lifting industry standards.
I sat on the first ABA committee in 1987. Initially forming the view that all banks cooperate through the ABA to ensure the sector is a positive contributor to the economy and community. A banking code of conduct, collaboration around payments, reviewing ill-considered legislation proposals, and more recently trying to reduce the impact of scams and online fraud are all examples of this contribution.
I think it's been really critical that the banks have put aside competition to say, how do we support customers experiencing domestic and family violence, and what is the bank's role to provide that protection? And I remember presenting this paper, Anna Bligh's face just dropped, and we were all pretty gobsmacked actually about what we found on banking platforms. All the banks just said, we don't want this on our watch, we want to do something about it. So we came together collectively to do that. 16 banks in Australia now have adopted financial abuse terms and conditions, basically saying to customers, you can't weaponise our products and services as part of domestic violence. That's globally leading action from the banks. That action has now prompted insurers, telcos, education and fintechs to follow suit.
Here in Australia, we have one of the strongest banking systems in the world, and I think the Australian people expect banks to use that strength to do what they can to improve the banking system, to strengthen the Australian economy, and to build the financial well-being of every Australian. And when banks get that right, when they come together in the right way and collaborate on the right things, I think the public recognises that.
I've always found the ABA and the industry really constructive to deal with. They treat the community sector with respect, and so I've always found that the relationship has been really productive.
Great, round of applause. So what a wonderful look back at the creation of the ABA, the evolution of its role and the substantial positive impact it's had over an extended period. I want to take this opportunity to congratulate Anna and her team and all of her predecessors as well. So well done, Anna and the team. When I reflect on the video, two words do come to mind, and they're apt because it's resilience and readiness. And firstly, if we look at resilience, the ability for the industry to adapt, to respond to recover from and learn from disruptions, but also readiness, that standing ready to embrace new technology, new ways of working, to deliver positive outcomes for customers, employees and broader stakeholders. So that now leads us to the opening panel, which is on the topic of resilient and ready. And I'm delighted to introduce our first panellist, Anna Bligh, the CEO of the ABA, Andrew Irvine, the ABA Chair and CEO of the NAB Group, and Marnie Baker, ABA Deputy Chair and CEO of Bendigo Bank. Please join me in welcoming them up to the stage.
Well, thank you very much, Ian, for that introduction. Can I also thank Ian Hunter for that warm welcome to country, and welcome all of you to the ABA conference for 2024. This is, as you heard earlier, the first time that we have held our conference here in Naarm, in Melbourne, on Wurundjeri land. And that does mean that while there are not a lot of familiar faces in the audience, we've got some first-timers who can be here as well, and we're delighted to have you. I think we've put together a very rich and engaging agenda that I think hope will be thought-provoking, and I'm looking forward to sharing ideas with you over the next couple of days. As you just saw, in 2024, the ABA celebrates its 70th anniversary. I did just want to stop there and thank Peter King, the CEO of Westpac, who's here with us today. It was one of Peter's team going through archive boxes for some other purpose earlier this year that found the minutes of the first meeting of the ABA, which was held on May the 3rd in 1954. And Peter recognised its significance and drew it to our attention, so thank you, Peter. I think it's always important to understand and know a bit about your own history. During that 70 years, the industry has faced many changes and many challenges. But the transformation that's occurring in banking right now, I think it's fair to say, is occurring at warp speed. So our theme of resilient and ready couldn't be more timely. We are facing into an economy that is plagued with persistent inflation, very high, higher than normal interest rates, and households really feeling cost of living pressure. Meanwhile, the shift to a digital economy continues at pace, and it is changing just about everything in banking and financial services. It is changing how and when Australians do their banking. It's changing how they pay for goods and services. It's changing how we think about what money is. It's changing even the way that criminals try to steal the money from banks and customers. In this context, the ABA has some really clear priorities for this year and beyond. The first one is to support customers during periods of financial stress and ensuring that they are resilient and ready to face into those higher interest rate environments. Protecting customers from scams and fraud. Thirdly, to work with government and and various regulators to modernise our payment system. And fourthly, as you will have seen earlier this week, doing what we can to ensure our continuing access to cash in an environment of steep decline in its use, despite the best efforts of Ian Hunter. The agenda, I think, is jam-packed with insightful speakers, some very informative panels and some great networking opportunities. So I hope you take advantage of all of those. And without further ado, I'm going to get us going by interviewing the chair of the ABA, Andrew Irvine, and our deputy chair, Marnie Baker. Let's get going, Andrew.
Let's do it. Good speech, by the way.
Now, I heard earlier, Andrew said we were going to have elite economic commentators and banking boffins. Which one do you fall into, Andrew?
Yeah, well, I heard two words, guns and boffins. So I'll leave it to the audience to decide which one we are.
Andrew, you have been NAB CEO and ABA chair now for around 3 months. Mm-hmm. I'm sure it feels a lot longer given some of the issues the ABA has had you dealing with. But how would you assess Australia's economy at the moment? What are you seeing in your customer base? And on the basis of that, particularly as someone who's relatively new to this country, would you still say we're a lucky country?
Well, I think we are. I've had the pleasure of living in Asia, in Europe, in North America, and we should never forget how fortunate we are living in Australia. And even though times today are challenging, I'll talk a little bit more about that. The resources that we have, the beautiful country we live in, it's safe. We have good quality institutions. There are very few countries in the world doing better than we are right now, and we should remember that. That being said, as you highlighted, there are real issues that I think Australians and our customers are having to deal with. The averages right now are, some of the most challenging in 30 years in our economy. And that's a challenge because Australians aren't used to having to live in a country that isn't growing to the extent we've had. We've had 30 years of really strong economic activity. So while it's not recessionary, and by the way, there are many countries in the world that are in recession or in worse place than us, they've had that experience in the last 10, 20 years, and we haven't. The other thing to note is that the averages actually don't tell the story at all. And the averages are a composite of a very diverse country. I was in WA 3 weeks ago, and the economy there is growing 6%. That's boom. And so there's people there that just don't understand how we're feeling here in Southeast Australia. It's very, very different. You go to Queensland too, and you have an economy that's growing. You've got significant inward migration, both from outside of Australia as well as within Australia, going to that market. They're building infrastructure for the Olympic Games. So doing quite well. And then you've got Southeast Australia and Victoria in particular, I'd argue, that's doing it tougher. But even that doesn't tell the story. You look at cohorts of households, and there is a bit of a disconnect from a demographic standpoint. Older Australians typically own their homes and typically have paid off their home loan. They're getting a great rate of interest in their term deposit at the bank, and they're feeling pretty good. And that's probably a third of households out there that we kind of forget about. And the narrative is often talking about either homeowners, and actually maybe the forgotten population are people that don't own a home, they're renting. I was out last night with some customers, and one customer said that their rent has gone up 33% in the last 2 years. 33%. And I bet you their salary hasn't. So it's just a good example of what parts of our community are facing that makes it tough. Now, the good news is people have jobs. And we've still got really, really low levels of unemployment. And as a result, the vast majority of households and customers are getting by. They're budgeting. They're not enjoying it, but they're getting by, and they're having to make decisions. Generally speaking, they're paying the home loan, they're paying the rent, they want to keep their family safe, buying groceries, buying fuel where they need to, but juggling. And obviously, were the employment statistics to worsen, I think that would be really, really difficult for Australia. But thankfully, for now, that's not the case.
That's holding, yeah. I was pleased to hear you mention Queensland and your wrap around the country. I should say, I note that I'm not wearing maroon today, but this was as close as I could get to it. So for the Queenslanders in the room, be interesting evening tonight. Marnie, how are you seeing current economic conditions? You're a significant size bank, but you're headquartered in regional Australia. And, I think sometimes to bring an interesting perspective. One of the things that happens in a tough economic environment is things get pretty competitive, and customers are shopping for a better deal. How are you seeing that?
Yeah, well, as I'm sitting here listening to Andrew speak, I'm just having a look at his socks here with the sheepdogs and the sheep on them.
We are a big agri-bank, Marnie.
So we'll talk about, from a regional perspective, I think it is pretty well known that during COVID, we saw the regional economy actually outperform metro economy there. But, like Andrew said, things are tougher. Cost of living is definitely having an impact on certain cohorts of people. And that extends out into the regions too, albeit that the regions tend to be, quite a resilient bunch because sometimes we don't get the infrastructure that perhaps metro gets, so we have to be a little bit more innovative in relation to that. We have seen, we're also seeing that in regional Australia that unemployment is less than what you'll even see in the metro areas. But that has a flow-on impact as well, to labour shortages and the flow-on effect to housing, which I know is spoken about quite a lot, but the supply of housing and the accessibility of housing in regional Australia is probably one of the biggest issues that we've got there at the moment. And from a banking perspective, it's sort of key to what we can do as an industry to assist our customers and assist government, who are well and truly across the issue as well, to ensure that we can do something about that sort of supply of housing. Household income has reduced over the last couple of years. We've absolutely seen that occur. But I'm hoping that some of these stage 3 tax cuts, getting inflation back towards 3% is going to be able to help. But there's an optimism that's there, I think, in the regions that is just a part of the very fabric of being a regional Australian.
Andrew, given that there is a cohort of Australians who are feeling that pressure, you've been travelling, as you indicated, east and west coast.
Yep.
You've talked a little bit about the difference between Perth and here, but what are you seeing around businesses or customers running a small to medium business? And what sort of differences are you seeing perhaps by sector?
Yeah, I think the first thing to note is businesses entered this period of difficulty in the best position they could possibly have been. There was a significant transfer of money from the public purse to the private purse during COVID. And so commercial and small business deposits were at peaks we'd never seen before. So I think that's been really, really important. And again, I think the story is one of it being a little bit cloudy. There are many businesses doing really, really well. But there are sectors of the economy struggling. I think sectors of the economy that are focused more on discretionary income are doing it tougher.
So as customers tighten their belts?
Yeah, they're having to choose where to spend their money. It was interesting. I was with one of our clients who runs a large sporting goods business. And I thought the commentary that he had was really instructive for where we are right now as a country. And the comments were this. He said, if there are trainers under $80 or $100, I'm selling those in 2 or 3 days. And then he said, And by the way, the trainers...
That's runners or sand
runners,
shoes
what-
for other people if they didn't know.
All right, runners. Runners over $300, $400, $500. I don't have them in my store for hours. They're gone. People want the rare, the luxury goods, and there's lots of money out there if people want something to buy it. But runners that are between $100 and $300, you know, the normal kind of average pair of sports shoes, they are simply not moving. So consumers are really focused on value where they need to be, and then when there's something that they want, they're prepared to make a discretionary purchase. You saw that when Taylor Swift was here, right? The economic activity that she had. People, if they want something, will go for it. And so how you're doing as a small business depends very significantly on the proposition you have, the business you have, the location you're in, and how you're looking after your customers. So it's everywhere, I would say.
And Marnie, you're seeing similar in...
Yeah, absolutely similar. You know, it is tougher out there, absolutely is tougher, but it is uneven. It's really interesting to, and I think, you know, partially around, you know, you talked about Taylor Swift, it's the experience. People are looking for experience. We've seen, which has been really good, we've seen an uptick in tourism, you know, migration has sort of assisted, but, you know, small businesses absolutely rely on household spending. And so it's linked to the last question, I suppose, that you asked there, Anna, in relation to, you know, these stage 3 tax cuts and those sort of things. If we see a throughput in household spending, then that's going to assist small to medium businesses.
I'm going to turn to scams in a minute, but I should have said at the beginning, we will be finishing this session by throwing to the audience. So as you're listening to both Andrew and Marnie, please don't hesitate to think of some questions that you'd like to throw to them. Andrew, you heard me talking about our priorities. One of the big priorities is protecting you know, customers as well as the industry possibly can get from scams and fraud. We have, as you know, established a scams accord that we are working to implement. It, I think, sets a new standard of protections to shield Australians from pretty sophisticated international criminal gangs. I'm interested in how your bank and what you know of what other banks are doing, how you see that challenge. And you know, what are you doing to respond to that threat for customers?
Yeah. Well, look, I think this is the scourge of our times. It's an absolute plague, and unfortunately, I do feel that criminals are going to continue to get more sophisticated, and the advent of capabilities like AI and generational AI are going to increase the threat vectors and the sophistication of the attacks. So we're going to have to continue to work really, really hard as an industry, and I think we're going to have to work really, really hard on educating Australians to protect themselves at the same time. But there is some light, I would say, and we need to focus on that too. And Australia is one of the few economies in the world today, and we've got to remember this, where scam and fraud losses are falling. And I think that's really encouraging because these threat actors go where the money is. It's a very normal, rational thing for them to do. And so you want to be the best alarm system on the street, if you will. That's the analogy. And I think right now, Australia's leading the way a little bit. And we're all, I think, part of that. I think government's done a good job in really rallying around the cause and getting the banks and telcos to work as a Team Australia to protect Australians. I think the narrative and the dialogue that we've had on this topic has meant that most Australians have become more aware, more scam aware. And I think that's also a good thing. As a bank, some of the things that NAB has done, we're adding more friction into our payment processes. So if we're seeing someone sending a payment somewhere they've never done it before, we're basically asking, are you sure? We're putting friction in where in the past, the goal always was to make the payment as easy as possible, as quick as possible. I think now we're trying to put in a bit more friction, and we've added tooling that looks at the biometrics and actually the way you interact with your devices. So how you think about keystrokes and how you use your phone, the angle of the phone, these things, if it's different than what we've seen you doing in the past, our intelligence will kick in. And these are things NAB's doing, but I know all the banks are really pushing into this space. And I think that's yielded really good outcomes, but we're going to have to keep working hard at it.
I think, as we talked, as you saw in the video when we talked about what are the right things for banks to collaborate on, because there's certainly a lot of things you shouldn't collaborate on. But I think, Marnie, one of the things I'm very conscious of is when some banks take action to close the doors to scammers, they pretty quickly go to another bank that's got open doors. And so this is an absolutely classic example of something that can only be dealt with collaboratively and making sure everyone's shutting the same doors. So, and it costs money, so it's harder, sometimes, but not all banks can move at the same pace. How's your bank thinking about that?
Look, I'm really proud of the industry and how the industry's actually approached this, because it isn't a competitive issue. I mean, this is a war against the fraudsters, and we're in it together. And as an industry, that's been really apparent, hopefully, for people. But from the government all the way through that whole ecosystem that we keep talking about, everyone has to be on board with this to try and, to reduce the possibility of scams occurring. But I am really, really proud of the industry in working together, because you're right. Perhaps those with more resources may be able to invest more into this. But if the major banks, for example, or larger banks, put in place things that are going to deter people from actually being able to scam or defraud their customers, it'll actually just trickle down to the next largest, right all the way down to the small players. And that doesn't actually help anyone. And it doesn't remove it from the Australian ecosystem. And so I'm really pleased with what we've done there, in that there's assistance between banks. It's very, very open. We're sharing intelligence. We've put in place things. We've introduced and are piloting name check. From the CBA is sort of, we've been able to use some of their things that they've been doing, and that's saved. We estimate $7 million in fraud that could have actually occurred, which is just simply being able to check your payee details against past transactions to validate who it is. And it's even some of the simpler things too. We're putting friction in the system and, increasing security around things, but it's education and awareness. Right, yeah. It's that literacy component. And, we've got the fourth largest sort of branch network in Australia, and we're using that network to be able to run sessions with communities, not only our own customers, but more broadly communities, to educate around scams. And that gets to some of the most vulnerable in communities, and we do know that these fraudsters, they do target the more vulnerable. So it's a concerted effort by the whole industry.
Marnie, you talked a little bit in that answer about different sized banks, and the Treasurer announced about 10 days ago now his response to various reviews by the Competition Authority and parliamentary committees. And one of his responses was to announce a review by the Council of Financial Regulators into the competitive challenges for small and medium-sized banks. It was an interesting announcement. I think it made a number of people very happy to think that these issues might get a more comprehensive airing. Interested in your views on that.
Yeah, well, like I said before, Anna, Bendigo Bank has the fourth largest branch network in Australia. We're servicing over 2.5 million customers in over 400 communities, right, across Australia. And, in the Australian banking landscape, our presence is important, as it is for all medium to smaller and smaller banks, because it does provide choice for competitors, and that's good for all Australians. So, I was pleased to actually hear the comments from the Treasurer. I'm pleased that there's going to be a review and looking at reforms that's actually going to improve the competitive position for medium to smaller banks within Australia. We deal with this, we use a lot of language around proportionality. It's understanding, the size of organisations, the complexity of organisations or the significance of those. We should be right-sizing, regulation, legislation, right-sizing that, having those conversations before legislation comes into being about what's actually the right size for that in a proportionate sense. And a really good example of that, and a more recent example, is around the consumer data rights, CDR. Medium, smaller banks, international banks, so outside of the big guys, have spent over $500 million to actually meet or to invest in CDR rules, which enables data recipients to be able to receive customer banking data. Now that's a lot of money just in its own right. When there's probably only, I think it's 0.5% of, right across the industry, of customers are actually taking that up. But when you look at that over $500 million, that equates to 2 to 3 times more per user of that than what the major banks and the spend that the major banks have had. That seems disproportionate. And you can look at it in any sort of measures. It's 2 to 3 times more on a cost basis. It's 2 to 3 times more on a revenue basis. So they're the type of things that we're sort of, we want to be addressing. And if I think about, even, and I know we'll have APRA here, no doubt, but, APRA has talked about actually filling that legislative gap in the smaller banks around capital and liquidity requirements that apply to the minimum liquidity holdings in those. And the changes that they're talking about making is going to have a direct impact on the profitability of those organisations, because they're going to be forced to hold lower yielding securities. So there's things, I think, that there's conversations that we should all be having around that sort of proportionality and making sure that, legislative changes and regulation is actually fit. Like I said, for the size, the complexity, the significance, of organisations. Because if we don't get that right, that impacts competition, it impacts innovation. And those things, if we're impacting that can't be good for the end customers.
That's a policy the entire intent of that policy setting was to encourage competition, and in many ways has actually had the opposite effect in terms of distracting and getting resources allocated away from things that would have made competitors stronger.
And we've just talked about scams and fraud, and customers are telling us, help us to ensure that our money's not put at risk here. And when you're having to make investment decisions about where things go, we would like to have more of a say.
You have to prioritise the one that's legislated.
That's right.
Over sometimes the one that might make the bigger difference.
Yeah.
I'm aware that there are likely people in the audience who would like to put some questions to either Andrew or Marnie, or both. Do I have anybody?
We've got a couple of microphones moving around the room. We've got time for a couple of questions. I'll ask a quick one while these microphones find a home. Throw your hand in the air if you'd like to ask a question of our panel. Can I ask just a quick one as an outsider? I was reading a few months ago that when people came off these fixed term loans with the higher interest rates, the housing market was just going to be devastated. Then I read the other day, there's a record amount now sitting in offset loan attack. Just quickly, where are we at on how Australians are handling these higher interest rates in the home loan sector?
Maybe I'll start, Marnie, and see. I would say we were very worried as an industry about what would happen as these low fixed rate mortgages, as people came off them. And I think what we've found is that consumers have been able to juggle it. Bigger proportion of take-home pay is now going on the home loan, and therefore there's less discretionary income to spend on other things. But arrears in the banking sector are incredibly low still. I think 1.5 percentage points, and that's across all the banks. And so, I think that's encouraging. That doesn't mean there isn't hardship out there, and we always say to anybody, if there is hardship or if you're struggling, call us, because the sooner we know, the more we can work together to help you. But I'd say generally, Australians are getting by.
Fantastic. And I think just to add some sort of numbers to that, just within our own organisation, and because these are sort of public numbers, I can speak about them. We're still seeing, that squirreling away of money that we saw sort of through COVID.
Yeah.
86% of our home loans actually have a buffer there, a financial buffer. 41% of those are ahead of their repayments, at least 1 year ahead of their repayments. 31% are at least 2 years ahead of their repayments. So, I think people have managed their money well, and it is tougher, absolutely. And as we look forward, we look into an interest, whatever that interest rate environment is. It's not to say that it won't get tougher, but like I said, we've seen a slight uptick in 90-day arrears, but it's still at historically low levels.
Let's take a couple of quick audience questions over here. What would you like to ask?
Hi, Marnie, Andrew. It's Ben Johns from Suncorp Bank. I just wanted to ask, we talked about housing affordability earlier. Just really keen to get your views on what are the top one or two things that you see the banking industry playing a role to really try and improve that space?
I'll go first.
I might be a little controversial here. I feel that we've got to a position as a banking industry where we are not lending as much as we could to people who are able to afford to put themselves into a house. And this doesn't go to the accessibility, but it does go to the affordability of it. I think we're seeing more people being forced into the non-bank sector for housing, and that really concerns me. There's a lot of people, as I talk and anecdotally, as I sort of get across the country too, that just now, and especially younger people, just say, I'm just never going to be able to afford to actually own my own home. And that sort of concerns me because, we are infatuated with housing here in Australia. From the government all the way through, but that does worry me that people are feeling that they're never going to be able to get that opportunity.
I completely agree with that commentary. I might add, however, that while there is a demand side problem, as Marnie just articulated, I actually think the bigger issue is supply side in this country. And often the narrative is on the demand side because it's the thing that we can see and feel, because most of us are purchasers and consumers, but we've got to fix the supply side. The rate of new construction in Australia is woeful. Compared to the market I came from in Canada, we'd be doing multiples more. And so thinking about, and there's a plethora of things that need to be addressed, from planning permission to taxation to new methods of housing and modularization to more innovation around footprints. In the last 4 years, this is a stat people would probably not know, the average size of an Australian household in like 4 or 5 years has fallen by 10%. So if nothing else, we need 10% more homes, more dwellings to house the people we have. Never mind the migrants that are coming to our shores. And so we really need to think about new types of dwellings to house these people. And so there's a massive amount of work that needs to happen. And it's my view that this is the single biggest policy issue facing our country.
And I'll just add to, from a funding sort of perspective, and the government from federal and state, are throwing a lot of money into this. I would suggest that you actually throw that money into communities at the grassroots, because they know how they can actually go about to actually build the housing that's required. It tends to get lost a little bit in the bureaucracy and the cost, sort of spirals when it sort of spins around a bit. Get it to the people who can actually do something with it.
Can we give Anna Bligh, please, a big round of applause? And Andrew, Irvine and Marnie Baker, thank you so very much, guys. Wonderful conversation.